Hello crypto ninjas, welcome back to my channel. Today we're slicing through the confusion, investing, trading, and spotting crypto. What's the real difference? Let's start with investing. This is the long game. You buy Bitcoin, Ethereum, or solid altcoins and hold them for months or years. Think HODL. You're betting on adoption and tech growth. It's least volatile day-to-day, perfect for long-term wealth, and has lower risk of losing everything if you pick strong projects. Next, spot trading. This is simply buying and selling crypto at the current market price, no leverage, no loans. You own the actual coins. It's like investing but shorter term. You can swing trade over days or weeks. Spot is moderately volatile, great for short-term plays, and safer than leveraged trading because you can't lose more than you put in. Now, trading with leverage, this is the wild ride. You borrow funds to amplify your position. A 10x leverage means a 1% price move equals 10% gain or loss. It's most volatile, designed for short-term scalping or day trading, and highest potential to wipe out your money in minutes if the market turns. So, here is a quick recap. Long-term crypto investing, HODL, focuses on holding strong assets like Bitcoin to benefit from adoption and growth, minimizing daily volatility and risk. Spot trading involves buying and selling crypto directly at market price. It's a shorter-term strategy with moderate risk, as you can't lose more than your initial investment. Leverage trading uses borrowed funds to amplify gains and losses. It's extremely volatile, designed for short-term trades, and carries a high risk of losing your capital quickly. If you must use leverage, never go above between 3x and 5x, and only risk 1 to 2% of your capital per trade. Anything higher is gambling. That's it, ninjas, clear, simple, done. Smash that subscribe, drop a thumbs up, and turn on notifications so you never miss a drop. See you in the next video.